Hello there, folks. Welcome back. Welcome back to another episode of Wave Watch with your host, Sleepy Bull. Tonight we're going to go over none other than Bitcoin. And this time we'll be doing the BLX chart. A simple trend analysis. The reason why we want to do a simple trend analysis is, by the way, if you like this video, please feel free to like, comment, and subscribe. I like to go over the crypto market, stocks, and sometimes commodities, as well as the wave counts, the Elliott wave theory wave count. So if you want to learn about wave theory, feel free to subscribe and you'll learn for free. Follow along. Add commentary. I'd love to discuss. Back to the video here. So what we'll be going over tonight is the what I like to call the best fit trend line. And the best fit trend line is a technical trend line that is displayed across the entirety of the chart. Excuse me, on the entirety of the chart. And it has also some very interesting mathematical properties that can give us statistical advantage. As you can see on the chart here, I drew what looks like and what most likely is. And you'll see statistically, it also is too, the best fit Bitcoin trend line. As if you look at this trend line closely, you'll see that it has held from the inception, not inception, but June 2011, all the way through history. It held the lows of September 15, the highs of February 14. The highs and briefly overtook the highs of December 17, the lows of the COVID drop, the highs of March 21, and the lows just recently happening in November 2022. It doesn't seem like that long ago, November, December, but it doesn't seem like it was that long ago, but it was a while ago. And the question is, will we break the trend line or will we continue going forward? Sometimes when you do wave theory, you need trend context. And that's why I like to zoom out and look at the macro trend. It gives a lot of trend context and most likely reality where things will go. Now, if you look carefully here, you'll see that not only has this trend held since inception, not only has the tops and the bottoms been carved out, but and not only has it held exceptionally well, but it looks like we haven't even broken out of the trend line. So what that means is that Bitcoin, in a macro sense, is, as obvious as it seems, still in an uptrend. So I'm going on a limb and saying, if we do have a drop, we won't go below this trend line. Period. So it looks like the lowest low possible is 40K. 40.6K, something like that. If we do break this best fit trend line, it'll be the first in history. And it could be a wick, like here, seen here, or seen here, briefly gobbled up and then expanding back to the upside. Now, alternatively, where's the upside? Right now, the upside is held at 449K. Beginning 2025, 600K. September 2025, 800K. 2026, February, 1 million. It begins to accelerate in dramatic fashion. And in all likely reality, these figures, I'm not saying these figures will be reached in those time frames, but these are the upper bounds. So most likely you'll have a meandering of sorts around here, sometime around this time frame, and then you'll have a jump up somewhere around there. So we expect for Bitcoin to remain within these bounds. Now that we've established the best fit trend line, let's look at the statistical correlation to it. And I introduce to you, my friends, and I'm sure you've seen it, the logarithmic regression curves. Take a closer look. Does it look familiar? It does, because it's the same best fit trend line. It's the same best fit trend line. And the beautiful thing about the logarithmic regression curves is that it gives you a coefficient of correlation. It's hard to see here, but if you look carefully, it's here. It's here. It's here. It's because my background is black. But if you look carefully and if you highlight it, if you do this for yourselves, you'll get a 90% plus correlation. Highly correlated with. So this is a trend, a highly correlated trend with 2 standards of deviations. Price does not vary. And by the way, these are 600 weeks of data points. The blue line and the red line are the extreme bounds. This is 2 standard deviations away. This is 2 standard deviations away. This is, orange line is 1 standard deviation away. The green line is 1 standard deviation away. 1.2 standard deviations. So like I said before, this trend is 90% correlated. It's going to hold. It's going to hold. It's going to hold. You'll have a wick most likely in worst case scenarios down to the 2 standard deviation. In the worst case scenario, which brings you down to these ranges, which is what? 20K? High 20Ks, mid 20Ks. Anything below that is not likely. Very not likely. And anything above it is, as I said before, most likely a good selling point, but just a meandering of sorts in the greater trend. And you know, these things are highly correlated, 90%. So just to reiterate, you know, this whole panic of where Bitcoin might go, yes, wave theory does predict a drop down to as low as 15K, maybe even lower, and crazy, you know, sigma events like what was it, like the 1930s, a 4, 5, 6 sigma event like the 1930s, where everything drops, you know, 80%, like in this case, 90%. So you can have a flash down here, maybe even here, which is crazy. But when you look at the trend, that's probably 3 standard deviations from the trend, because this here is 2. So in all actuality, if you even get to 20K, that is the buy signal. So yeah, this best fit trend indicator indicates that this trend is going to continue, and that in all actuality, much higher prices are soon to come. It's only a matter of time, and of course a matter of meandering of sorts, but it's coming. I hope you guys liked the video. Please give me a like if you love it. Sleepy Bull out.